Hello guys, welcome to the Trading Parrot. I have so much data that I need to show today on Saturday. I'm gonna split the video in half. Instead of getting one single video with 36 minutes overwhelming, I'm gonna do one video that is focused on the day-to-day trading, on the swing trading. Basically, we're gonna look on CME gaps, liquidation levels, order book, surgery, and liquidation pools, all of that. On the second video, I will be covering on-chain data, news, data gems that you must know for the next week and for possibly the upcoming months is a must watch as well. So make sure you watch both videos if you consider yourself really a serious trader, investor on Bitcoin. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And can we get 1,000 likes on both videos? That will be fantastic. If we are doing that, we are really cutting the nails that short to the YouTube algorithm that he cannot even manage to play guitar because of the pain. If you do play guitar, you know what I mean, right? If not, just smash the like and forget about it. And people were asking if we can do a sale over the weekend. Yes, we will do a sale on all the products on the Patreon shop are gonna be discounted at 40%. The sale ends on the long weekend, so Tuesday morning is gonna end. Make sure you use the code TTP sale. So let's get straight into business. And I have downgraded the 4-hour and the daily, as you will expect after two successful breakdowns on 4-hour and daily. The 4-hour though is still holding the previous resistance, so we haven't yet entered into the previous range. You may not know, but I still put it in dark red, not yet in the very light one, which is quite bearish. So we'll see how we do with that. On the daily, the trend line, the most bullish one, has broken. That one belongs to an ascending wedge that we covered last night when you were still having drinks in the pub and not watching my video, which got very little views at the time we are breaking down a multi-week support. What are you doing, guys? Then the hash ribbon also flipped into a buy signal after 1 day of a recovery and a capitulation signal. 2 consecutive capitulation signals. Let's look about that in the second video when we talk about on-chain data and news. MACD has a potential incoming bear cross. It's been a period of bull bearish crosses on the MACD daily, which is not very common, but it's giving me an idea that there is an area at the moment of a discussion between bulls and bears, whether we're gonna continue putting higher highs and taking the remaining liquidity, which is the largest one we've seen in all this range in the price. I'm talking about all the range of the price of Bitcoin from 18K to here. That is definitely the largest pool. During this week, we confirm a golden cross, and typically right after that, we get a little bit of a shake, but so far that shake is not that big. We'll look into that in more detail once we get into the daily chart. Weekly and monthly is still in an uptrend, so if we hold the trend on weekly and monthly, we should consider this red on the lower time frames as an opportunity for additional upside. I'm surprised that with the new announcement from Trump that 50% on tariffs on Europe, we are only breaking up until the daily and still holding support decently, the horizontal supports. And I think there is a little bit of an exhaustion in Trump's stimulus. He keeps coming every 1 or 2 weeks saying something really bearish and then something really bullish, telling you to buy the heck of the market and then dumping it further down. And I think the markets are starting to suspect that Trump signal trading is not the best way to go. I don't know, let me know in the comments. No attack on Trump, just saying the facts. Oh, we are on a Saturday, we have to do the due diligence, which is to look into how we close the CME futures. And by the way, don't know if you're noticing, but this is kind of a head and shoulder. During the full rally, I keep seeing head and shoulders, and each individual one breaks down right below the neck just to take the highs and put the new all-time high. I wonder if this time we are gonna do the same. But going back into topic, we close on CME futures at 108 AA5. And notice one thing, that the chart closes in here at 108.3. So it puts one more candle, which could be the case that there is something wrong in the listing of CME on TradingView, because it goes one more hour live in the chart and the price close there matches with the previous candle, which is this one there. So I left a line for future reference both on Binance and on CME to remind ourselves that most likely the close is the candle before the last one we see in the chart. This is Friday, by the way. So my preference, as I said yesterday in the video, is to see a breakdown in here. Why is that? Because that way we build a CME gap to the upside, which could bring back the price to this range, and potentially that could be all that we need to carry on consuming later during the next week this area in there. We have 3 days of bank holidays. I still haven't checked if in the US that is also bank holidays, but at least here in UK it is. If we were to pump over a weekend, which has been something that we've seen a few times in the past weeks, and we went higher, let's say we go straight away on Saturday, Sunday, and we take all that liquidity, I do not consider that a great, fantastic scenario. Although the swing traders could benefit from that if they take an entry in here, which as I can see, there's a ton of bidding right here defending the 107. If they do that over the weekend, and if they get away with that, and we take all the liquidity to the upside, we are basically putting the last nails in our own coffin to produce a blow off top. Of course, not guaranteed, but we increase the chances that that's where we land. That means the price hitting all this liquidity, having now 4 CME gaps to the downside up until 91k, and producing a rejection from, let's say, 120, 125 over a weekend with a huge gap to the downside that could just get things started to the downside to go to 90k. That's a fall of 30k, and that on the weekly and on the monthly wouldn't produce the best looking candles, right? A huge week to the upside, a shooting start on Bitcoin is not what we want to produce this weekend. Believe me, we prefer sustainable, and that means short-term pain for the shorts around here, pullback, consolidation, pushing those RSI projections on the reverse RSI to the upside so we can hit it later. When we delay those things, when we convince the longs that we are not really going there, that's when we go there and we hold there. So even if you're bullish, you should aim for a little bit of bearishness and reserve your bullishness to yourself. That is the way to go. Okay, let's go with the 4 hour. We can see that after the breakdown that we were talking around Friday in the morning, play out went to our support, double support, because we have a horizontal support at 47 that we've been tracking and the ascending red line, and right there at that spot is where we are forming some sort of double bottom that coincides as well with the support of our white line in the price. So we got support on momentum, support on white line, everything looks perfect for a potential bounce that people are defending. That bounce can get to 110 and still be bearish if it gets stopped there, because at that point we are putting a lower high and we got a recipe for just a dead cat bounce with further continuation to downside. If we can reclaim this and go beyond 110, test it and carry on higher, well, that signals that potential for the blow off top with very high targets of all these liquidations are still on the table even on a weekend, regardless, despite the fact that that is not the most healthy longer term move, if that makes sense. So yeah, on the 4 hour, that's what I see. I see that the longs are trying to defend the previous range and assuming that we can have some at least relief rally. So entering at this support is what they're doing. Many of them are already allocated. They might rally on this way to 110, take some profits there and see if there's going to be continuation, or if they smell a dead cat bounce, they're just gonna dump it, in which case we can do some Fibonacci retracement, assuming that the bounce reaches just the 110, then an extension of 1 takes us back to 105, an extension of a golden pocket takes us into 102. We look into liquidation levels, we'll see each one of these targets, how heavy they are, also how heavy is 110, to see if the mathematics are matching the incentive for that being a trap and playing out. At the moment, I see strong support in here, so it's very likely that we go up. How high we get, that's a different discussion. On the daily, we can see the breakdown from the ascending wedge that applies to the momentum and applies to the price in shape, although the price hasn't broken down yet. We have the past week high around the 106,600. We have the top of the range on the daily that is still being defended. So I put things in red on the daily just because of of those worries, but I should have maybe turned it into red once the price also breaks down. So I'm gonna change it to gray, just because we are still defending the ascending wedge, we are still defending the breakout, so we haven't come back down below the blue line. If we go below that blue line, below that white line together, then we have a stronger case to say, well, the pullback might be a little bit deeper. Still neutral at the moment. I mentioned also the MACD potentially putting a bear cross again after multiple bull and bear crosses in the past days. You can see how the MACD is also rolling over, like the first impulsive moves were really big. The first one actually was the biggest. The second one was the biggest. The first one was less, and the third one was insignificant. And now what we are seeing in here is an attempt to do once more that move. In 2024, the momentum reached 7,000. Now we are sitting at 4,000. So we could argue that there's still room to go, but this one started from lower. So this has been a move of 7.7, and this has been a move of 9.3. So maybe a 20% bigger than what we have done so far. On the CPR, we have lost with an engulfing red candle the level of resistance number 2. On this model, we are 1 week away from closing the month of May. We defended the first one, the second one we lasted 1 day above it, and we'll see if once we get to 109.5, if this daily closes with the resistance playing the role of resistance, call it the close below that. If that's the case, the model says, well, we might as well go and pay a visit to the next level down of resistance. I call them resistance because the model has 3 levels of resistance in green and 3 levels of support in red, despite the fact that 102 is now playing the role of support. I hope that makes sense. Volume continues on the way down on volume fight. In the second video I put today, I'm going to talk about the hash ribbons, the net taker volume, very interesting things, also about the open interest that's printing a signal, and we'll cover a lot more to compare each and every single move up that we have this cycle, the SOPR, what are people doing. We'll see how many people have been liquidated so far in this move up, and whether we are due now for a reverse effect in the market. We'll talk about the hodl waves and all of that in the next video. It was an impressive week for accumulations on spot ETFs. You can see the all-time highs continue to put new records every single day. From extreme greed of 78 with these things of the tariffs, we went into 66. That is 12 points down, but price hasn't reflected that much. So there is a little bit of a divergence in the excessive fear, but price still not pricing in that excessive fear, in my opinion. Let's look at the short-term liquidation pools. You can see that we have an area here at 112. The 110 that we were talking about, that fair value gap is located right here, overlapping with a small chunk of liquidity. Definitely 112 is much more attractive. For continuation down, the short-term liquidity has pulls from 106 into 103.6. If we were to put a deeper retracement in the price and leave this liquidity for later, thanks to potentially breaking down also the price support. Remember, RSI has already done it, so if we were to see that on the price too, what are the targets? Well, we have a target of a big liquidation at 100k, which I left intentionally out of the chart so the normalization shows the rest of the levels. But if I bring that back in the chart, you can see that is huge relative to the rest. And here I'm excluding the 10x. Something very interesting in here, right? So if I remove the 10x, 100k is definitely the heaviest level in the close proximity short-term pools. If I put 10x, then 113 is the heaviest. That means that in here there has been a new wave of people shorting that are not degens. The degens of 150x's are the ones that attract the price the most. 10x's relative to 100x attracts the price way less. So we could argue that there is a fraction of them that are more experienced traders that are entering in a short and placing their risk around here. That's something I didn't spot before, but that is the case. On the liquidation heat map, we can see that 93 is definitely the heaviest of the past month. We got a new wave of longs liquidated. Once we started the pump, we got shorts liquidated here and a bunch of times again in this area, but we haven't seen one of these big bars of short liquidations. That's definitely what we're gonna get if we get once again over 112 and we consume the red long-term liquidity. Let's look at the order book. Let's see the placement of the orders, of course with a grain of salt because it's weekend and everybody pull out from the order book on weekends. What's left is just a few orders that we can see that are substantial. We see 500 in here at 115. The 120 is gone for the weekend and there are some orders up until 100k. The CBD is on the downside, and as I mentioned, the longs are defending 107. That's why the order book depth is in the green, forming this double bottom formation against a neckline of 108.3. The order depth visualized here on this view shows again the 115. That's a confirmation that that order is there. On the lower end we have a decent order at 103, but you can see the curve shows that the longs are defending the 107. This increases substantially this way. If you follow the line that is vertical, we do not have that level of selling pressure as we do have with the bidding, and that's why we see a 009 of defense in here. That is pretty decent if you look at the past performance. When they defend an area, they do it pretty much with this intensity. The previous time it was 11 to 7. In here we have peak at 14 and now we are at 9. So they are allocated. That 14 probably got filled with this green candle there, stating that they are gonna stand their ground. We don't know if that's a short play or a longer play. The delta has decreased to 500k. I say we need to decrease 1/3 to half to get a move back up, and people listen. At precisely 500k is where we are seeing that they are defending at the moment. So expecting that it's just going to completely get consumed is not necessarily the case. As you can see, we could consume it fully. If we go to 110 and we get a rejection there, we turn the whole scenario into a dead cat bounce over the weekend, and then we get a move down to completely capitulate this remaining 500k over the weekend. And at that point, potentially on Sunday, some positive narrative comes in and suddenly we go back into consuming what the market maker left there on the table. This is CoinGlass Legend. It's a new product that I noticed they were releasing on their website for free, and it's got some liquidity at 113 and 14. So we got multiple sources of order book at the moment competing. Fire charts is also showing 120. So we got a full confluence. The purple whales are slowly decreasing their positions of longs. Who is still increasing the longs over the weekend? Pretty much no one. The brown whales are just flat. They decrease and now they increase, but they are still lower than what they used to be on the 23rd of May. Fair value gaps, yes, we have some fun to get into 110. That's where I want to go just for the dead cat bounce. If we cross that, then we're gonna get into the territory of pinching the last liquidity, and then anything can happen, right? Price exploration, if it's sustainable, or a huge rejection from there with a deeper correction. Guys, if you want to trade Bitcoin with $500 for free and then get to keep the profits, whichever profits that you make, then you can use my link in the description from Bybit, which offers you to trade any of the coins in this list for free. All you have to do is find the link for Bybit in the description, open it, click register to claim, and that's it. If you don't want to do KYC, because that is a little bit of a hassle, let's face it, if you just want to deposit in 30 seconds and start trading Bitcoin and altcoins, well, my link for bluffing offers precisely that on a non-KYC basis, speeding up the whole process, no hassle. 15% cashback that you get up until the 26th of May. That's when the campaign ends. And remember that despite my offer of 40% these 3 days of weekend, using the code TTP sell, you can still use this QR code if you meet the requirements and get 3 months of my top products in my shop for free. Thanks so much for watching, and watch out for the second video upcoming, which is gonna be very interesting, a little bit less short-term oriented, more into on-chain news and higher time frames as well. Do not miss that. See you on the next one. Bye-bye.